to Business Morning right here on Channels Television. Well, the first trading week of November, that ends today right here in the nation's capital. We see most asset classes looking quite stressed in this first trading week. But here are the stories you should be looking at this time. Looking at oil first. Oil prices, they rose today following 3 days of declines with worries about excess supply and slowing demand in the U.S. The prices are set for a second weekly loss, and definitely the first trading week of November not looking so good for oil market. We see the price of Brent there. Good Friday, $64.07 is looking good this Friday for the oil market. WTI crude still managing to hold above $60. $60.10, 1.13% uptick. So we're seeing big moves this Friday morning, but Brent and WTI are set to fall about 2% this week, down for a second straight week, as you know, major global producers, they're increasing output, and we're seeing the impact there on the oil market. So all the stories now, the Nigerian Upstream Petroleum Regulatory Commission, that's the NUPRC, they've announced plans to boost the country's crude oil production as part of efforts to enhance, revenue generation and strengthen Nigeria's position in the global energy market. Speaking at a forum in Abuja, the chief executive of the NUPRC, Engineer Gbenga Komolafe, says the commission is implementing strategic initiatives to address challenges affecting production capacity, including crude theft, aging infrastructure, and underinvestment in the upstream sector. He adds that the new regulatory frameworks under the Petroleum Industry Act are designed to attract fresh investment, improve operational efficiency, and increase output from both traditional and marginal fields. According to the NUPRC, current reforms are expected to raise daily crude oil production significantly over the coming months, positioning Nigeria to meet and potentially exceed its OPEC quota. Let's flip over to the markets now. We see the Nigerian equities market, it's in the red again, and this time we've had about four trading day sell-offs, about 1.8 trillion wiped out from the market cap within just this 4 trading sessions this week. So yeah, I did talk about stress for some asset classes and indexes for this first trading week. So we started off at 154,000 from the last trading week of October, and there you have it, smack on 150,000. That was the close for yesterday, down 0.36%. It's been all red, so definitely, except something miraculous happens in this trading day, then we can see a positive week. But for now, that's not happening. And analysts are saying the panic sell-offs are linked to the federal government's proposed 25% capital gains tax that's set to take effect January 2026, which will apply to profits above 150 million threshold. 150 million, remember that. So that's the sentiment right there in the equities market. Let's look at other stories now. Nigeria's non-interest capital market has grown to over 1.6 trillion naira in value, signifying its expanding role in financial inclusion and infrastructure development and support thereof. The disclosure was made by the Director General of the Securities and Exchange Commission, that's Dr. Imomotimi Agama, at the 7th African International Conference on Islamic Finance 2025 in Lagos. He mentioned that Nigeria's sovereign Sukuk program has raised over 1.4 trillion through 7 issuances since 2017. While the recent approval of a $500 million international Sukuk would mark the next phase of the country's efforts to attract ethical financing for infrastructure and economic growth. And the federal government says the recent decline in food prices across major markets reflects the impact of its targeted market interventions, increased agricultural production, and sustained investment in the food ecosystem. The Minister of Agriculture and Food Security, Mr. Abubakar Kyari, made this known at the 47th regular meeting of the National Council on Agriculture and Food Security, which held in Kaduna State, where he unveiled the new financing and production programs aimed at achieving national food sovereignty. Kyari announced that the Bank of Agriculture received government's approval for a 1.5 trillion naira recapitalization alongside additional 250 billion financing window to support smallholder farmers' agro-industrial expansion. Take a listen.
Our discussion also focused on ensuring farmers' safety, managing agricultural landscapes, improving rural infrastructure, intensifying research and innovation, and expanding agribusinesses nationwide. The National Council on Agriculture and Food Security is Nigeria's highest policy forum for the sector. It brings together federal and state governments, development partners, and private sector stakeholders to review progress, align strategies, and strengthen partnerships that drive innovation, best practices, and inclusive growth across the agricultural value chain. Mr. President's charge remains very, very clear. I quote, "Our farmers must transition from hoes and cutlasses to tractors and harvesters." Food sufficiency is the first currency of national stability. This commitment is firmly rooted in the frameworks of the Nigerian Vision 2050, the National Development Plan 2021 to 2025, the National Agricultural Technology and Innovation Policy NATIP, and our ministerial roadmap and priority actions.
Now to our first conversation, and yeah, we're starting with oil and gas industry. Nigeria's petroleum distribution pipeline network, once a vital link in the nation's energy value chain, is now in dire conditions, sparking concerns over safety, efficiency, and energy security as governments and industry players push ahead with a decade of gas initiative aimed at expanding production and infrastructure. Attention is turning to how quickly reforms and investments can restore confidence in the system. Joining us now, we have engineer Dr. Vincent Zionwu, Associate Professor, Department of Chemical and Petrochemical Engineering at River State University. We also have engineer Aloha Innocent Amagada as the CEO of Amelin Projects Limited, and they're both joining me right here in the studio for this conversation. It's great to have you, sirs. TGIF to you both. Thank God it's Friday. Great to have you, sirs.
Yeah.
Good morning.
Thank you for
having us. So definitely, yes, this is our #1 foreign exchange earner. You know, at this point, that's the oil industry, and definitely, you know, would hope, or we're hoping that we don't send out much oil, you know, going forward. We refine more, you know, in here, but there's a distribution problem, you know, at this time. We've been talking about that for the longest time now. Are we seeing any improvement? I'll start with you now, Engineer Dr. Zionwu. Are we seeing any improvement on distribution within the country and the state of our pipelines, really?
Yeah, let me begin with saying that the history of pipeline began sometime in 1852, thereabout, when the Americans started laying pipelines. And for us, it began in about 69 years ago, and when oil was found at Oloibiri. Beginning from that time, pipelines have been laid. And unfortunately for us, these pipelines are aging. They are faced with the issues of corrosion, pipeline vandalism, and all of those issues. So the issues of pipeline vandalism and all of that indeed are impacting on our pipelines. And there is need to improve on this pipeline. Unfortunately, the current administration is working so hard to ensure that there is synergy between operators, regulators, to bring about increased production, and so the pipelines are serviced. And for those of us who are close to the industry, we find that there is clearly a clear direction on improving pipelines, and that is working. And good to say, we have an association, the Pipeline Professionals Association of Nigeria, PLAN for short, that is galvanizing the way things are done there, I mean in the industry, with regards to pipelines. Here with me is one of the board members of PLAN, and because we want to support the government's initiative in making sure these pipelines are very effective, productive, and that they are serviced on time based on the regulation that they should be serviced every 5 years. There should be intelligent pigging to be sure that they are clean, not being eaten up by corrosion. So plan is focused on working with them to improve on the degrading pipelines.
Right, and definitely with so much use. I'll come to you now, Engineer Eloho. What would you say are the immediate steps we can take, right now to remedy the situation? We need these pipes working, but I don't know how much disruption will come from having to start maintenance now, but we need to start maintaining them.
Yeah. Okay, so thank you so much. First of all, let me just give an insight of give some data, So right now, according to the NMPC report, we have about 5,120 kilometer,
of petroleum pipelines across Nigeria. Can you put that data up for us?
5,120. And, you now look at the aging factor. We started laying pipelines 4 decades ago. That's 40 years ago. That was when we actually started, building a pipeline system in Nigeria. And, an actual design life factor or life cycle of a pipeline is 20 years. So if you look at it, 40 years down the drain, pipelines, most of the pipelines, about 90% of them were constructed, they are already aging. They have exceeded their life cycle. So what do we do? Now we are faced with issues of corrosion. We are faced with issues of, pipeline rupture due to aging of the pipeline asset, and right now there are issues of, vandalization, due to the activities of third parties, expressionist group, and there is a lot going on at the moment. So we believe that that is why we, as industry stakeholders, have come together to say, so what is the way forward? How do we actually ensure that our pipelines keep flowing, gas and oil, and one of the ways, like he said, we are members of the Pipeline Presidency of Nigeria. We are a Board of Trustees member. We are looking at, in the conference we had last year, one of the best way we can actually monitor our pipeline, first of all, is technology, using technology, the use of drones. It was in our communique last year, so we must bring AI into technology, into monitoring our pipeline system, because about 90% of pipeline failure today are actually due to vandalism by third-party expressionist groups. So when we deploy drones to monitor our pipeline, we should be able to get real-time activities around the pipeline right-of-way. So that is number one. Then two, more investment needs to go into the pipeline asset, because if you don't have more money pump into it to ensure that the pipelines are maintained, then the issues will still be there. So we have to deploy technology, then more finance we have to go into it. As we progress, we'll look into the finance structure, how that comes into play.
Right, and definitely I'm hoping that we don't need President Trump to come and tell us how to maintain our pipelines. We start maintaining it as soon as possible. Yes. That'll be great, at this point. All right, let's look at some of the initiatives by the government at this point. Let's start with the Decade of the Gas initiative. That's been on right now. Are we seeing any fruits from it, so far, in your opinion?
Okay, you asking me?
Yes, you, sir.
Okay, clearly we see some improvement in the initiative. That began sometime in 2021, and as a decade is to expire by 31st of December 2030.
2030?
Yeah, okay. So give and take, we are 5 years into that program, thereabouts. So with what we have seen, clearly there is improvement in the initiative. Gas infrastructure, there is a lot of what government has done to put in place pipelines to provide gas, transport the gas. For instance, you have the AKK project that's supposed to transport gas from where it is produced in the deltas to the north, Kaduna and Kano. So that's an initiative that is indeed doing so well for the country already. And basically, that's why the theme for NIPITES conference this year addresses where we are and where we are heading to and beyond. And that is building robust pipeline systems for the decade of gas and beyond. So in that conference, we are going to x-ray whatever positives we have so far and looking forward to the remaining 5 years and beyond that, what could be done. So experts are going to be talking to us to analyze what progress has been made. So we ask the public to come and hear firsthand from these experts like Engineer Eloho Amagata, who is here, FNSC.
Right. And, Engineer Eloho, definitely he did say what we should be looking at for the next 5 years. But I'm wondering, let's say the next 2 years, what can we use as, measures to say, oh, we've seen this level of progress with the Decade of Gas initiative?
Okay, so the idea is to ensure that, they boost production by over 50%, and I want to look at it from two perspectives. The first one is the area of, the regulatory frameworks, and the preparatory plans for it. Then the second one is actual achievements on ground. In terms of regulatory frameworks, we have achieved about 90% because, that gave birth to the Petroleum Industry Act, which was actually widely publicized, and, every framework, every document that we need is in that act, relating to the, Decade of Gas initiative. And the second aspect is the aspect of the actual what is on ground. Today we have the AKK pipeline is constructed, is in progress, the OB3 pipeline, we have NLNG Train 7 ongoing. So in the next 2 years, we hope to actually boost production, both domestically, and that for forests, in up to like 20%. So the work is in progress. All we need is just for more funding to go into the projects, because I know even the AKK project suffers a lot of setback because of, funding, so we calling on the government to pump more finance into it to ensure that these are closer, because when you don't have a pipeline network in place, actually in the oil and gas value chain, the pipeline network is #1, because it's what takes the link between the operators and the end users. Today, most industries are lacking supply of gas. If you go to most hotels today, they are running on diesel. But what we are saying is, when you have a gas production output, a good one, and you have a good pipeline network system, then your industries are well catered for. So domestically, we'll have enough to use. And I look at the future. I know some time ago, the government started, there was this NIPCO project in Benin, where I was fully part of. The idea there was to get that vehicles to move from fossil to CNG, where they are driven with gas, and also lay pipelines that takes gas to people's homes. If you want to actually industrialize your nation, you must have a good pipeline network system in place. And that is what happens abroad. You can use the gas to cool your house, use it to heat your house, use it to cook. And by doing that, the government is making a lot of money.
Now, we had issues recently with cooking gas prices. They soared. Recently, they did try to, normalize, but we're hearing there are rumors again that, cooking gas prices could go up. And, definitely all of this, boils down to production costs. It also, takes up production costs. That's for the producers of different, goods, at this point. Yeah. And we're still trying to tackle inflation. So I guess if we're able to solve this energy problem, to act like a catalyst for really driving down inflation and helping our producers be competitive with countries like China, where they don't have this kind of problems, for production. Well, let's look at some other issues now. It's still with logistics. Yeah. What's your assessment of the Nigerian Midstream and Downstream Petroleum Regulatory Authority's approval of interim 13 cents per MSCF for NNPCL Gas Infrastructure Company Limited. I'm guessing that's for transportation. At this point, what's your take on that?
Okay,
Doctor?
so that's transportation tariff. I think it's a welcome development. Like I said, the issue of funding is a major issue, and what this has brought to us is that, why I say it's a welcome development is it makes the system to be transparent, introducing transparency into the system, because over time there have been rumors of this tariff here and there, but this government was bold enough to introduce it. And now that they have introduced it, it brings investors confidence to the system, because if you are not sure of pipeline infrastructure actually involves a lot of funding, a lot of investment. So how do people come to invest when they are not sure of their return on investment? So when you know that, okay, if I invest $10 million, in a pipeline to construct a pipeline, this is what your return on investment is. Then you have the confidence to come in. So it boosts confidence, it brings accountability, and trust me, in the next 5 years, the system, there will be a robust pipeline network system in Nigeria that can cater for the need of Nigeria, both domestically and beyond. Yeah.
Well, I guess we're definitely looking forward to all of that. 2026.
And remember, it's interim. For now, it's interim. So they are testing the waters. It's from July 1st to December. Okay. So they are testing the water to know actually the right pricing. And by next year, we should have a actual pricing for it.
Fantastic. All right, any parting words?
Yes, and just to mention that it's important that the gas infrastructure, the pipeline infrastructure on gas should be improved. That's essentially because if you look at the volume of gas that is wasted, vented or flared, you would realize that we are losing so much money. About 150,000 standard cubic feet is wasted. For this year alone, when we have utilized 1.8 million of gas. Now, look back, say 5-10 years ago, you can tell how much we have wasted, just burnt away. So it's important that the gas infrastructure, the pipelines, should be improved. So we'll be able to capture these gases, sell them for money. And then the other negative side of it is, if we do not do that so quickly, we will be burning our environment. Yes. Imagine what is happening with global warming. Imagine the flooding because the polar regions are melting away and the waters are moving into the ocean.
And we have COP30 already starting.
So you can tell. And that's why in the NIPITES conference, we'll be discussing a whole lot of that. In fact, we are proposing a change in the semantic. Flaring, which bears no emotion.
We have
to change to something like gas wastage for environmental degradation, GWED. Clearly, when you use that expression, gas wastage for environmental degradation, it helps the regulators. It helps all of us as individuals.
Gas flaring is fancy.
It's fanciful. It doesn't tell you the emotions. It's like saying 20 persons suffered fatality and 20 persons died. You see the emotions it brings. So we should change, from gas flaring, which is very fanciful, to a word that when regulators, all of us as individuals use it, we realize that there should be a rapid progress in capturing these gases and, getting the money and saving our planet.
All right, I guess that's a good place to anchor it at this point, and hopefully, because we're talking about this for the longest time, this issue of gas flaring, hopefully we can tackle it at some point. Thank you so much, Engineer Dr. Vincent John, Associate Professor, Department of Chemical and Petrochemical Engineering at River State University. It was great having your perspective. Engineer Loho Innocent Magara, CEO, Amelin Projects Limited. Thank you both for coming on today.
Thank you.
Thank you.
Enjoy the weekend coming on.
Thank you.
All right, we'll take a break now. When we come back, we'll discuss the latest Eurobond offering and what's playing out in the capital market. That's for the moment. Just stay with us. All right, let's talk money now. Nigeria's sovereign Eurobond offering, that was oversubscribed by 400%. The dual tranche issue comprising a 10-year and 20-year tenor attracted more than $9.1 billion in orders in the face of concerns over a potential U.S. military threat linked to rising Islamist militant violence in Nigeria. What's driving this keen demand? Join us for this conversation now. We have Professor Uche Waleke, Director of Institute of Capital Market Studies, Nasarawa State University, KEFI, and he's also the President of Capital Market Academics of Nigeria. We'll also talk about the first trading week of November in the equities market. Great to have you, Prof. Good morning.
Thank you so much, Ladi. My pleasure being here.
Fantastic. Let's start with the Eurobond offering now. What underlying, fiscal or macroeconomic indicators in Nigeria, might explain the strong demand for the Eurobond issue, and how do these, relate to Nigeria's, debt sustainability trajectory?
Well, let me note that since 2011, Nigeria has been quite successful in the international capital markets. Recall that in January 2011, Nigeria first issued Eurobond. At that time, it was just to test the market, $500 million. Again, it was oversubscribed. So that trajectory has continued up, until this very one that we have had. Of course, it's against the backdrop of the relative macroeconomic stability that the country is currently witnessing. Stability in terms of moderation in inflation rate. Of course, investors are also looking at the fact that it would appear that the economy is beginning to turn the corner. External reserves on the rise. The country has also recorded for a very long time, current account surplus. The exchange rate has also stabilized. Okay, so these are some of the variables or components that form country risk assessment, that go into country risk assessment. And in recent times, too, we have, recorded or witnessed favorable credit ratings, from major global, rating services. So investors, of course, took all that into cognizance, with respect to this Eurobond issuance. And that explains the reason, too, we had investors from virtually every part of the world. People showed strong interest from UK, from US, Middle East, Asia, and including Africa. And of course, eventually the Eurobonds are going to be listed on the London Stock Exchange, the Nigerian exchange here, and the FMDQ. So it's also a way of further developing our own domestic market. So talking about the factors, these are essentially what, in my view, must have influenced the strong demand for the Eurobonds that we issued. And of course, you can't also rule out the fact that the issue was attractive to investors in terms of terms, and the fact that global liquidity, was an issue. Liquidity in the sense that across the world now, particularly developed economies, rates are going down. And so when investors see opportunity for high returns on a risk-adjusted basis, of course they would fall for such.
Prof, looking at the macros at this point, yeah, we did mention inflation. We've had currency stability, and the strengthening of the naira. Talked about 1,470 to the dollar. Well, given the yields of 8.75% for the 10-year, 9.25% for the 20-year, achieved in the offering, what risk and opportunities do you think investors should be aware of at this point? Or are we out of the woods when it comes to inflation, interest rates, and currency volatility?
Yes, of course. If you also take into cognizance the fact that the reforms are just kicking in, talking about the fuel subsidy removal, the unification of exchange rates, including the recent tax reforms, which have all been welcomed by the international community. Of course, they are just kicking in, and I'm pretty sure the international community is also placing a lot of hope, in the outcome of the reforms in the medium to long term. Okay, so that also explains why, in my view, the next couple of years, I also want to believe that these yields will eventually, moderate. They may not be as high as we have them, as the risks, or the reforms, they begin to yield, fruits. So there's no doubt that we have been experiencing some level of, macro stability. The situation today is not, as it were, obviously, in 2024. So I think the timing too is right. If we had done this in 2024, maybe we wouldn't have been as successful as we are today. That's also because of the improvements that I made, I referred to a while ago.
All right, so Prof, let's look at the markets now. Other sides of Nigeria's capital market. We're seeing November, starting off quite rocky for the stock market. We kicked off about 154,000 points, now 150,000. Sell-offs have wiped out about 1.8 trillion naira in market value. That's for the equities market within just 4, trading sessions. Some say it's a capital gains tax coming in 2026. What's your opinion, sir?
Well, of course, I think sometimes we should expect this kind of behavior, market behavior. For me, it's not very unusual, and I think it will be too early to begin to ascribe the issue of the CGT as being responsible for this. The CGT is not going to kick in till January, and to say that traders or investors are already beginning to take positions on the basis of that, would be, would I say, presumptuous. I don't think is the right, conclusion. Again, don't also forget that the threshold, we're talking about the CGT, the threshold, was increased. Section 46, sections 39, 46 of the Nigerian Tax Act. That is where you find the issue of CGT. It increased the threshold from 100 million to 150 million, provided the gains are not more than 10 million naira. But of course, for individuals, what it also means for individuals is that an individual too may end up paying less than the standard 10% CGT that we have today, because the CGT for individuals has been integrated in the personal income tax in the band, in the income tax bracket for the individual. So where the individual's tax bracket, for example, is nil, as with the case of maybe, of course, we don't expect that kind of person to have that kind of volume, shares. That is what applies. The maximum, mind you, the maximum tax bracket for the individual is 25%. Now, for companies, yes, we are talking about 30%. By the way, the law also says that the president, can also, on the recommendation of the minister, reduce it from 30 to 25. So I think the issue is with the corporates, But as I mentioned earlier, I think it would be premature to say that what is happening now is as a result of the CGT that will be taking effect from January 2026. I think the major reason for what has happened now, in my view, is profit taking, and the fact that portfolio managers are also rebalancing in favor of fixed income, where we'll continue to see attractive yields. For me, that's the primary reason. And if you also notice some of the earnings we've seen from some companies too have not been as promising, and investors may be also reacting to some of those earnings. But I think that this will reverse. This will reverse, before the year ends. Year-to-date return is still strong at 49%, about 49%. Yes, the last time I checked. That's still way higher than inflation rate of 18.02%. So it's still positive, real positive, rate of return from the equities market. And if you also check the major indexes, apart from the banking index, where we are, recording 35% year-to-date return, and the oil and gas, for obvious reasons, 7% year-to-date return. Major indexes have outperformed even the all-share index. Talking about consumer goods index at over 100%, talking about industrial goods index at 66%, and even insurance, at over 70%. So overall, one can say the market, has done well this year, and and I think the market will finish up strong, by December. So I think I don't think it's something that we should worry about. It's a phase. Once this season is over, I'm sure the market will return to its bullish trend, if you like.
All right, I guess you heard it from the professor there. Just good old profit taking. That's what's kicking off in this first trading week of November. Thank you so much. Professor Uche Waleke is the Director, Institute of Capital Market Studies, Nasarawa State University, KEFI, and also the President, Capital Market Academics of Nigeria. Thank you so much, Prof, for sharing your TGIF with us. Thank you.
Yeah, thank you, Latif.
All right, we'll take a break now. When we come back, we'll get a sense of what's playing out in Nigeria's bakery sector. That's in a moment. Just stay with us. All right, we see Nigeria's bakery sector, a key segment of the country's fast-moving consumer goods industry, still undergoing notable transformation driven by shifting consumer preferences, input costs, and technological adoption. As demand evolves towards healthy and more convenient options, bakeries are adapting through innovation, improved operations, and strategic market positioning. However, persistent economic pressures still persist at this point. To join us for this discussion to understand what's playing out with the consumers, we have Mrs. Adijat Olani Olopade. She's a financial secretary, Premium Bread Makers Association of Nigeria, that's PBAN. She's joined me right here in the studio to give me my daily bread.
Yes.
Is it?
Your daily bread.
Good morning.
Good morning, lady. Good morning, ladies. Yes. I'm glad to be here. Good morning, viewers.
Yeah, so, looking at, some of the inputs, it goes into your business. We're seeing flavor that's gone up from 12K to about 15,000 naira. We're seeing softener. That rose from 60,000 naira to about 130,000 naira. I'm sure you tell us the metrics there. Yeah. Sugar, that dropped, I believe, from 80,000 to 74,000.
Yes.
Milk, 85,000 to 120,000 naira. Yeast dropped 65K to 60,000 naira. So it's like a mixed picture there with some of your inputs.
It is.
Help us break it down.
Okay. Our main ingredient is flour, followed by sugar and the other components that you spoke about. Relatively, we've had stability in the price of flour for the past 1 year. Sugar had come down, but every other component had increased significantly. Softener, we use softener. We had an increase, a huge increase. We use preservative, that had increased too. We use margarine, that had increased. So it's like a bouquet. So at the end of the day, we just have to find a balance. And that's why price of loaves are still where they are now. We've not had any significant drop in prices. Some had stabilized, some had increased.
Right.
And so at the end of the day, we're still where we are.
Right. Nothing has changed.
Nothing has changed. Nothing has changed significantly.
At this point. All right, let's look at consumers. Consumers change.
Oh,
at this point. Have you noticed anything with demand?
Consumer dynamics are changed, basically due to the purchasing power of consumers. When we started, if I want to use myself as an example, when I started baking, that's about 13 years ago, the largest size of loaf we had was 900 grams. And pre-COVID, before COVID, we had 1.3 kg of loaves because it was like people were conscious of the value of buying big loaves. But now, we are doing 300 grams of bread.
300 grams. From about
1.4 kg to 300. And now, the 300 grams is the one that is moving volumes.
So does it mean the bread has gotten lighter?
No, people can't afford to buy 1.3 kg of bread is over 2,000 naira. 300 grams of bread is going for about 400 naira. Purchasing power, people can't afford. How many family can put 2,000 naira to buy bread? So now we have consumers buying 300 naira, 400 naira loaves. So we can see, like, that's what I said, from the 2000 when people were buying 1.5 kg bigger loaves for the family. But you see people buying 400 naira, 300 naira bread. So consumer changes, the purchasing power of the consumers, as it's going down, it's affecting. And any discerning bakery now definitely has to follow the trend. We're all doing smaller size loaves now. Despite the fact that when you look at it, it's more expensive to do smaller size of loaves because you use the same power, the same number of people, but you have to follow the consumer trend. That's what people want to buy. And that's what we're doing.
I guess
you still have to still maintain the quality despite the fact that you're doing smaller loaves. Because despite the fact that people are becoming more conscious of cost conscious, they still want quality. So the same quality that you do for the bigger loaves, you still have to do the same for the smaller loaves.
So I guess that gives us a snapshot of the state of the
economy. Average consumer,
in Nigeria. Because most of the time, if we don't paint this picture, you think everything is okay.
It is not.
For the consumer. The
It
consumer
is
is hit on all sides.
Yes.
At this point, from rising energy prices
Rising,
to, everything just eating into your disposable income. At this time. So, as a business, how do you take all of this in?
As a business, like I said, we're doing 1.4 kg before, and now we're doing 300. So we just had to follow the trend. How are you going to survive in business? We all have overheads, we have staff, we pay rent, we have to transportation of loaves. So how do you stay doing some of bakeries? You said 10,000 loaves before, and now you're now doing 5,000. So we just have to change our dynamics.
Right.
And follow the trend of the consumers, which is, it's whatever, pre-COVID, it was like bakery business was, pre and during COVID, it was like food business was the in thing. Everybody thought, oh, you can make money from bakeries. So now we have a lot of competition. A lot of competition. That's why it's becoming, if you go to any neighborhood now, there's no way you won't see two bakeries. There's a brand that come into Nigeria now, a chain of brand that every area you see them open, they have a bakery. So competition has made us more, we are all now more discerning now, and we really have to think of how do you continue to stay in business and make money.
Right.
So whatever you need to do.
So that's a lot of competition. And definitely looking at your association now,
yes.
Premium Bread Makers Association of Nigeria. What kind of conversations are you guys having?
Fine, fantastic. Thank you. That's why, when you talk about it, when you have an association, you have to look at the well-being of your members. So we have, as an association, we have a day out that we're having sometimes next week, and we're planning to bring members in, bakers. We're going to have a master class. We're going to teach people the business of baking, pathway to profitability, productivity, and growth. Because we've realized that in as much as more bakeries are coming in, most bakeries are still shutting down. We have a platform that you see people selling their equipment day in, day out, because people are not making money. So on that day, we're going to teach people, we have a masterclass, we're going to teach people, how do you run your business? How do you look at your numbers? How do you get raw materials at cheaper rates? How do you prevent spoilage? Because that's one of the albatross of the business. How do you use technology to drive your business? How do you use modern equipment? So it's going to be a beautiful day, and we're going to have exhibitors. We're coming with suppliers who come and give discounts, and so it's going to be a beautiful day for
and we need to help those struggling businesses so that we can
how to survive.
Our favorite bread going forward, and hopefully cheaper.
I can't promise.
Yeah.
I can't promise. But what I can promise, we are still going to continue to maintain the quality. But cheaper, I really doubt cheaper bread being available.
All right. Hopefully, and hopefully the price of butter also goes down.
Butter is not made in Nigeria. I think we have just made about 2 companies.
Yeah, I saw the price of butter in the supermarket recently, and I was like, is this real?
I really doubt.
Over 10,000 naira for butter?
Coupled with increased import rates next year. Yes, so I don't see butter coming down.
Wow.
So
the bread and the butter.
Thank
you so much.
Yes.
It was great having you for this conversation. Mrs. Adija Tolani Olakwadeshi is the Financial Secretary, Premium Bread Makers Association of Nigeria. Thank you so much, ma, for coming on today. All right, we'll take a moment now. When we come back, we'll see what's playing out in the global economy. All right, let's get a check now. We'll see what Kathy Wood, that's the great investor, what she's doing right now. She published her daily trades for yesterday, that's November 6, 2025, revealing a series of strategic moves across their investment portfolio. The most significant transaction was a sale of 160,000 shares of Roku Inc. That's trading on NASDAQ, amounting to about $16.9 million. This sale marks a continuation of ARC's recent trend of reducing its holdings in Roku, following substantial sales earlier in the year. On the buying side, ARC made a notable acquisition of 3 million shares of Arca Aviation Inc. with a total value of about $28 million. This purchase was spread across multiple ARC funds, indicating a strong interest in the aviation company, that's Archer Aviation, known for its innovative electric vertical takeoff and landing aircraft. Seems to align with ARC's focus on disruptive technologies there. And I will see Tesla shareholders, they approved CEO Elon Musk's highly contested pay package valued at up to $1 trillion over the next decade. If performance targets are met, in a shareholder vote yesterday, over 75% of Tesla shares voted in support of the record pay package. Shares of Tesla gained about 0.6% after hours on the Thursday following the news. The approval represents an endorsement of Musk's vision to transform the electric vehicle maker into an artificial intelligence and robotics powerhouse. The outcome was widely anticipated after Tesla relocated its headquarters from Delaware to Texas, allowing Musk to exercise the full voting rights of his approximately 15% stake in the company. Meanwhile, see Tesla Inc. Chief Executive Officer Elon Musk said he anticipates China will fully approve the company's advanced driver assistance capabilities in early 2026. He says we have partial approval in China, and hopefully we'll have a full approval in China around February or March or so. Musk stated at Tesla's annual shareholder meeting that what they've told us, that's according to him. The driver assistance technology is similar to what Tesla markets as full self-driving in the United States. Then we also see in the U.S., Trump has announced a U.S.-Uzbekistan trade deal. The president said late yesterday that Washington has reached a new trade and economic agreement with Uzbekistan, under which the Central Asian nation plans to invest heavily in key American industries. In a post on his Truth Social platform, Trump said Uzbekistan would invest nearly $35 billion in the U.S. over the next 3 years, rising to more than $100 billion over the next decade. And China's trade balance contracted in October as exports unexpectedly shrank for the first time in 18 months amid continued pressure from high U.S. trade tariffs and cooling overseas demand. China's trade balance was a surplus of $90.07 billion in October, according to government data, and the figure was well below expectations of $96.9 billion and also fell from the $90.45 billion surplus seen in the prior month. Then also, Shein expects $2 billion profit for 2025. That's a fashion giant. Shein, they're expecting to post about $2 billion in net income in 2025. All right, that's it for Business Morning today. Thank you so much for watching. I'll be back again at 1:30 p.m. for Business Incorporated. We'll tell you what's playing out with markets for the TGIF trade. Thank you for watching. I'm Ladi Williams. Bye for now.